Today we're going to be talking about mastering one simple concept at the open. Stay tuned, traders. We'll be right back. But just before we do that, what I'd like everybody to do again is hit the like button. A couple days over the weekend for traders to reflect on last week, what they did well, what they could do better, what they can improve upon this week. Hopefully you've been setting some 30-day goals or monthly goals, weekly goals, daily goals, mastering the day, making one good trade, and then moving on and making another good trade, and keeping things really simple on setups that you can scale and reproduce. Today we're going to be reviewing one simple concept. Mastering this one concept can impact your trading tremendously. Now we're going to talk about gold first and using the 1 minute charts in the open, and just to clarify some things for traders. 1 minute, 15 minute, end of day. People talk about smaller time frames being noise and everything else. Regardless of the time frame that you're trading, when you make a decision to enter the market, that's a moment that you need to determine your entry, your position sizing, your profit target or your exit strategy, and your risk management. Regardless of what time frame you're on, if you are entering the market, it is a moment that you make that decision. Using the 1 minute charts in the first hour to 2 hours of a session, going there with a plan, being methodically organized, knowing what you're looking for at timings, levels, etc., is no different than trading end of day. So this whole illusion that things are a noise and everything else is for the uneducated retail trader who really doesn't know what they're doing. Because if you don't know what you're doing on end of day or 1 minute charts, it's irrelevant. It doesn't matter what time frame you're trading. So just to clarify that, what we're doing on the 1 minute chart is very specific, very methodical, very calibrated to timings, levels, high and low of the day. We're going to talk about a simple concept today that happens at the beginning of every single session. Some instruments may not be as easy to identify, but it will be happening on a fractal level. Gold just happens to move very noticeably in 25 to 50 pip boxes on a regular 15-minute rotation. There's movement 25 to 50 pips like clockwork every session. There's typically a 50 pip move in every session. Asia, London, New York. And so this concept hopefully will help clarify some things that we've talked about in the last couple videos. The first hour we talked about that first 15 to 30 minutes, the market making a high, making a low, giving us our boundaries. Now we're going to be talking about the stop hunt, the basic master pattern of expansion, contraction, expansion, and trend that happens in every single session, and the difference on the pound, and looking at what we've talked about with the pound, major round numbers, but also the master pattern for the weekly template and how those 15-minute charts do the same thing that we look for on the 1 minute charts. So I use the 1 minute charts, my 15-minute levels. The same patterns will apply on the 15-minute charts, but I'm looking to enter in on that 1 minute chart to get the best price, keep the tightest stop, and be targeting 25, 50, maybe 75 pips or more, depending on the session, depending on the range of the bracket that we're in. But also we may get 25 and then 50 within that 2 hour window, or there could be 25, 25, and 25 within that Europe, London window, and in New York as well. We've seen some massive moves in the pre-hour and in the equity hour. So just to clarify, again, a 3 hour window, that's my maximum time. I know there's movement outside of these windows, but again, we'll clarify why and when I will look for trades outside of this window. But the whole point of me looking at these trading windows is that I know the market is going to move quickly when it makes a move from one side to the other, and we're going to talk about that pattern today. Asia 8 to 11 p.m. Europe, London 2 a.m. to 5 a.m. That middle hour 3 a.m. to 4 a.m. and just to clarify, a few traders message me, that middle hour is when London opens. Now you'll forgive me for sometimes saying 4 a.m. because it's 4 p.m. in Perth, but we're on daylight saving, New York's on daylight saving time, so it is 3 a.m., which I have saying the middle hour, but I've been saying 4 because I'm used to 4 o'clock in Perth. 8 a.m. to 11 a.m. New York, and that is New York Eastern Standard Time. The New York markets open at 9:30. And again, without the shadow of a doubt, there will always be a move, a stop hunt, or a trade when the equity markets open. So understanding the concept that when the equity markets open, volume comes into the market. That may often be a false move to the extreme, getting traders on the open of that market to chase the market in the other direction before reversing off of the high or off of the low. But we're going to talk about understanding this 1 minute pattern, this master pattern. And again, the same thing applies on the weekly template, the 15-minute charts. But every session, the same pattern shows up. We head into an open of a market. We could be anywhere, but we will have a major round number. We could be above and below a major round number. We could be between a quarter level and a major round number. It doesn't matter. We're going to have a major round number. The market will be in some form of consolidation. It may have just come out of the US session. We may have a high from the US session and a low. And we may be trading in a 25 pip box heading into the open. What we are looking for is evidence of expansion or a stop hunt in one direction. Okay, so the simple master pattern that we've talked about in the past is the market moving to one side and then the other for an expansion of the range in both directions. Now again, this could be 15 to 30 minutes for this to happen on the 1 minute charts. 15 to 30 minutes. Now, this may take 30 to 45 minutes. So if you're in here somewhere and the market's come down to the low of the day and it's around half an hour, now you're thinking potentially in this next 15-minute block, I may get a reversal trade. Now the other scenario is that this market could come back inside and roll over at zeros in the next 15 minutes, 15 to 30 minutes heading into the next hour. But this first initial burst to both sides is the basic pattern. Expansion, expansion, come back inside, trend. Hit the stops, trend. Now we can see this same pattern on a 15-minute chart over a Monday, Tuesday. Hitting a weekly high, auctioning down, taking out a daily low somewhere down here and continuing that move before reversing. We saw this on the pound last week. We'll go over an example on the 15-minute charts where the market was Thursday, Friday heading up. Monday continued that move. Tuesday took it up before reversing. But on the 1 minute charts, we may be between 0 and 50 heading into the US session. They may have hit the stops down low and over the next hour and a half came back up to hit stops heading into the US market as they did on Friday night, going down, reversing, and taking off for a 150 pip move up. Hit the stops at the open of the market, come back down, hit stops at break even. Okay, remember the theory, we want to make sure that nobody makes money. Okay, so they hit the stops before reversing, coming up and going vertical in a fast coiled move that occurred all the way from the end of Asia, open of London for the next 6 hours, coiled up for a big squeeze. The basic pattern though, again, we've got a high, we've got a low. Hit the stops, trend. Okay, that's the basic pattern. We may see the market go up, come back inside. So 15 to 30 minutes, and then come down and work the low of the day and come back. So we could see the 3 pushes for the M, the shortened M. Okay, we could see 3 pushes for the shortened W. Okay, we could see 3 pushes, same sort of thing, or we could see an extended stop hunt for the extended Y, or sorry, the extended M or W. But that first 30 to 45 minutes, look for the market to either move in both directions and then work one side, or to work in one direction to put in a high or put in a low. Now the difference between that and a trend trade is that they have already broken out of a geometrical range and now they are trending in one direction. But at some point they will start to lock in the high or lock in the low. And we'll take a look at an example from Friday morning on gold, where it was in a blow-off move heading into the open, and it continued to trend down for the next 30 to 45 minutes in that first hour before reversing, and that ended up being the low of the entire day. So we'll take a look at that, but the master concept is understanding that the stop hunt will occur. And so when people say, well, how do you know you're at the high, or how do you know you're at the low? Because we're looking very specifically for that pattern at the high, or that pattern at the low, or even culminating in a 1, 2, 3 with a reversal, okay, that again comes back and we get our 3 push pattern on the bottom. Again, at numbers, we want to see a level cleared out. The trade should be coming off of round numbers. If they clear out a round number level below a quarter or above a quarter, we could get the continuation of that trade at the next quarter level. So it may be at 25 or 75, but that's after they've locked in the low or the high of the day. 30 to 45 minutes on most days, the trade will be locked in for 25 to 50 pips. So when that initial burst happens, and if they continue to move in one direction, most likely that will end at 25 to 50 pips max. So it could, obviously if you're at 25 and it keeps going, now we're thinking 50 pips. But if they're working up a quarter level above the current high, or they've hit stops from a previous session, London, New York, Asia, whatever that may be, 3 pushes, 25 to 50 pips. Now we're looking at the reversal. The first place they will look to go is where that move started. So typically the beginning of that session, if that's where that burst started from, that is the low or the high of the current session day. If it's New York, that's the current low or high of New York. They're going to go back there. Why? Because people who are in that initial burst have stops below or above that area. So if they're up top, they're going to have money sitting there. If they're down below, then we look for, if they've hit it, they come back inside. Now we're looking at it for the trend trade, and that comes back to, are we up high and we're looking for the sell trade? Are we down low and we're looking for the buy trade to continue moving forward, possibly for a measured move now? Or are we in a trading range and this market may just coil until New York opens or until London opens or whatever, and we know then we could get another stop hunt to the extreme. There's your M, there's your W for a reversal trade, or it breaks out, pulls back, and continues into the next session. Okay, so they break out, they pull back and reverse. They break out, they pull back, and they go into a trading range, or they break out, they pull back, and they trend. Okay, so false break reversal, trend trade, trading range. Only 3 things they do. So when we look at this on the 1 minute chart, thinking 15 minutes, very unusual to see a trade in that first 15 minutes unless it's a blow off from an existing trade pre-market. You could be in a long trade off the bottom, off of 75 heading into the open. If first initial couple bars at the open goes to 25, you're out with 50 pips. But traders at the beginning of the market are now chasing that move, and they're buying at 12 or 11, and the market goes to 25 and starts to work the high before reversing and trapping them up high. So important to understand that. We'll take a look at some examples on the charts. Again, thank you for a ton of great feedback and comments. Master that one simple concept. Hit the stops, consolidate the market, trend. Happens in the gap times. Okay, it happens at the beginning of every session. It happens on the 15-minute charts at the beginning of the week. Heading into the new week, we either continue an existing trend trade and then lock in a high or lock in a low, or we get a burst to one weekly high or one weekly low, and either a continuation or a reversal now to work back to the other side. Hit the stops, and then look at the chart. Are we going to now see a trend trade develop Wednesday, Thursday, Friday, whatever that may be? Same thing on the 1 minute. If it's going and it goes your 50 pips or 75 pips or 100 pips, if it's the first leg, it might be 25 and they might pull back and then move it another 50. Lock in your profits. Understand where the trade may fail. Understand the timing window. Okay, if you're sitting around for 3 hours and you haven't got a trade, chances are you've either missed it or that market is inside of a previous session's high-low and it's going to move in the next 12 candle window. Keep it simple, traders. Stay disciplined, stay focused. Keep one simple thing in mind. Hit the stops, consolidate it, and trend. And may the markets go with you.
G'day traders, Stacey Burke continuing our discussion on mastering one simple concept, mastering the one simple pattern, understanding the stop hunt, and it doesn't matter what instrument, it applies to all of them. Specifically, I like to look at the weekly template with all the pairs, but the 15-minute charts can show us those levels. The 15-minute charts on the pound will show us these levels, and the 1-minute chart shows me the session pattern that I'm looking for. But just to start off again, we talked about understanding the simple concept of high and low, hitting the stops, consolidating the market, and trending. And so even if we just go to the beginning of a week, we can see that looking at gold, the market on the open of a Monday, pink line is the Monday, has opened and broken the high. We can call that an expansion of the range. So we have our consolidation. We have our expansion in one direction, the pullback, the expansion in the other direction, or the stop hunt in the other direction, and then the consolidation again back inside of the range. So even though we're heading into a new session, we're still inside of the high and the low. And again, I've talked about not trading in the gap times. Don't worry about me blowing this up and getting more detail. I want you to step back and look at the big picture. We already talked about the day zero. So Friday was an inside day, but you'll also notice the peak formation high and then the peak formation low in the U.S. taking out the peak formation high. This is a telltale sign on a day zero setup for a trend trade to evolve out of that narrow range day. They layered on top of the peak formation into consolidation, but the simple concept to understand is expanding the range. New high of the day, new high of the week. They come down, they expand the range. They hit the stops, they pull it back inside. Then they hit the stops, Europe, London Open. Expand the range, pull it back, and trend the market. This is a breakout of the London high, a pullback, and a continuation. But also, we have our stop on high, stop on low, pull it back inside, hit the low one more time, engulf, pin hammer, and trend the markets after a day zero. So again, doesn't matter what day we look at, we put our high and our low in place. Hit the stops, pull it back inside, consolidate the market. They hit the stops, it consolidates at the high of the market, and trends, breaking out. The market now comes back into the next session window to hit the stops, pulls back inside, comes down again, hits the stops on traders who are in the right direction, and then reverses to come back to the high of the day. Trends back up to the high of the day. There's your W. But as our week has started now, okay, we have day one of rise. Day one, narrow range day. Day zero, level one, day one. Okay, trend day. We come back the next day. We have our high of the day in place. The market works down, taking out the last high swing low. Hits the stops. Comes back a second time. Okay, we'll blow this up. Comes back a third time. Hits the stops at the open of the next day. Okay, one push, two pushes, three pushes down. That's our three push pattern. There's our middle structure. So heading into the next day Asian 12 candle window, we already have three pushes down to the low of the day, locking in that range. They've hit the stops. The next place to go is to the high of the previous session with the trend hitting the stops, pulls back, hits the stops. Here's your extended W. Here's your extended M. They pull it back inside and go into consolidation prior to the Europe London 12 candle window. It doesn't really go anywhere. It sits on top of the breakout. So they hit the stops, they pull it back into consolidation, and they continue to work the high. Okay, they hit the stops, draw a horizontal, get rid of that. They hit the stops, they pull it back inside, and they continue to work the high of the day, working the high, pull it back inside. Okay, we've got our high of the day in place. They pull it back into consolidation prior to the US 12 candle window. The last push up, that swing low, is where that move started from. Now, again, we're just looking at the 15-minute, but the concept is what will allow you to have a narrative heading into the session on your 1-minute chart. So again, we're Tuesday, and we're working the high. What does that tell you? We could be putting a peak formation high in place for not only the day, but maybe the week. 1, 2, 3 to the high at the U.S. session first hour. Large engulfment, again, we talked about this. 1-minute traders would have been entering in somewhere above 50 with a reversal, but they hit the stops. Okay, again, it does not have to take out the high, but we got people who are already in the trade at break even, or maybe even with a small loss if they've entered in somewhere below there. They come back down, they hit the stops, pull it back inside, and then start to trend down into the close. 1 push down, 2 pushes down, 3 pushes down, and they still haven't taken out the low of the day. What does that tell you? Again, now we go back into consolidation. Everything is the same. They expand the range and go higher, hitting stops. Come back inside, 3 pushes down, hitting stops. Before reversing, engulfing, pin, hammer, third bar of the first hour, and then continuing to trend back up. Obviously, we have money above the U.S. session shorts, hitting stops up top. So again, the simple concept. Hit stops, pull it back inside, trend the market. Okay? Hit the stops up top, work its way down in 3 pushes, pull it back inside, trend the market. We head into our next session. They continue to make new highs. They pull it back inside in the gap time. Again, where is the money? We know there's stops. There's money up here. The people are short. It doesn't have to go all the way through. It might, but they pull it back inside. There's stops up top. Where do they go? Bang, hit the stops. Pull it back inside. Hit them a second time. Pull it back inside. Pin, hammer for the fast move down through the higher lows, hitting traders who are chasing this move long. Hit the stops, trend the market. Okay, it dropped 50 pips. Okay, you're in this trade. 1 push, 2 pushes, 3 pushes down into the U.S. session 12 candle window for the squeeze. You've been in this trade for 4 hours, and if you haven't gotten your 50, 25 to 50, you'd have to be locking something in, or be at break even, or at 25, whatever that is. But this is a stop hunt on traders who are long in Asia. 1 push, 2 push, 3 pushes down at the open, the engulfment reversal for the squeeze and vertical move, 100 pips in 45 minutes. Consolidation, hit the stops, trend the market. So constantly, again, emphasizing looking to work from the high or low. Now people say, well, you're calling these swing highs and swing lows the high of the day. If this is the U.S. session, and that's the low for the U.S. session, and I'm in New York, that's the low of the day. The next day I go into Asia, and I'm short at the beginning of Asia. That's the high of the day for Asia, right here. That's the high. For Asia, that's the high. Of course, we know there's highs up here, but we're not up here yet. When we get up there, we'll worry about that. But first of all, we're going to worry about the high of the day in Asia. The market pulls back inside, hits stops on traders that are short at the rollover for dropping back inside. Again, coming back to the swing low before the session closes, breaking through and pulling back at the open, and then continuing to trend down to the low of the U.S. session. Pinning through, pinning through 1 push, 2 pushes, 1, 2, 3, inside of the low, engulfment, sideways. This sideways consolidation is a dead giveaway on the 3rd push. We get our little engulfment in the last hour of Asia, heading into the Europe window for a 50 pip move back up, plus to the overall high of the day and hitting stops. So consolidation, hit the stops, breakout, pullback, continuation, stop hunt, pulls back inside, comes back down to the low one more time before pulling inside and then going back to the other side. So again, understanding the box, the high and low of the box, hitting stops. You're looking for a W, a shortened W, extended W, or an M, extended M, shortened M, whatever that may be. Every session, there's going to be a move. We have a high and a low. Okay, the market in the gap time reverses and gives us a low. There's our low. Goes up, pulls back, keeps going higher and hitting stops. We got higher lows all the way along. When you see higher lows and they're going into the high of the day, you got to be thinking there's money there. This is a dead giveaway. They're going back down. They go vertical and reverse pin hammer. There's a pin through the high. And again, the simple concept every session. Consolidation. Okay? Consolidation. They hit the stops. London open. Pull it back inside. They go up a second time and it reverses. That's called an M pattern. You get a high in place and they go up a second time and it reverses and doesn't get there. That's an M. And you want to make sure you're not getting caught inside of a 3-push pattern on a shortened middle structure. So again, the market goes sideways before hitting the stops. Okay, a 25 pip stop hunt in the gap time before reversing off double zeros, coming up in 1 push, 2 pushes, and then a 1, 2, 3 to the high. So again, timing wise, that gap time, you're looking at a 2-hour window to hit the highs, pulls back inside, goes sideways. The equity market pins down and pulls back, and then trends. So they hit the stops, they hit the stops inside, consolidate, and trend the market. So again, your thesis coming in here is we're up high. They're working the high of the day. I'm looking for a short. What do I need for a short? I'm looking for an M up top. Well, they don't give us that, but they come down. They hit the stops. They come down, hit the stops, and pull it back inside. I'm looking for this market to roll over. Again, next day, they hit the stops. Okay, and trend the market with the existing trend. Work it up in 3 pushes, hit the stops, engulf, heading into the Asian session. Continue the second leg down. They hit the stops. They pull it back inside, 3 pushes up, roll it over into the Europe-London 12 candle window. Extend the range, pull it back inside. Okay, and again, another example of them going right back to the high of the Europe-London day, hitting stops. Traders are short here, come back inside to hit stops, bring it back down into the US session. 1, 2, 3, pin hammer, hit the stops, trend the market. There's your massive W structure for the double bottom reversal. 50, 75 pips depending on where you get in. Hit the stops, hit the stops. So if we look at our 1 minute chart, again, just every session, there's a move. It doesn't matter. As we head into the window, this first hour, we've got stops above and below the median price. So again, we're looking at our boxes. Where's the price? When the market opens, we're between 25 and 0. We got stops above 25. We got stops below just above 0. Market goes up in that first hour or inside here. This is consolidation. So if you're trading inside of here, if you get whipsawed, that's your own fault. This is a consolidation. They go up and hit the stops. They drop it down. Clean out stops on people who get in early. Inside, but go sideways. Vertical, 1, 2, 3, sideways pin hammer at the low, at double zeros for our shortened W structure. There's a little middle structure, so they go up, pull back, and continue the move for a 50 pip trade back up to 50. Round numbers. Okay, London opens up here. They work the high, work the high, work the high. That pin is the London open. Okay, for a stop hunt back through the low of London and into traders who are long at the beginning, 30 to 45 minutes into the session. That reversal bar occurred at half an hour, 35 minutes into the session. So again, 30 to 45 minutes, 15 minutes to put the high in, 15 minutes to put the low in, and then they reverse the market and trend it. That market stayed consolidated in a 50 pip box throughout the session. So again, 50 pip consolidation, a high and a low. They come down in the gap time. They hit the stops. Okay, working from the high and the low. That's all we did. We drew the lines at the high and the low. They come down and they hit the stops in the gap time. They work their way up. So an example of where this may have been a trade for some people. They go back up into the pre-market, first hour, 1 push, 2 pushes, 3 pushes, aught 50, dropping it down, pulling it back. Engulfing, there's our little M structure for traders who are trading this. Okay, shortened M after hitting they haven't gone to the high, but they've hit stops. Okay, again, understanding there are stops all underneath here. And then they work the high in 3 pushes. 1, 2, 3 pushes for dropping it down into consolidation and hitting double zeros, also hitting stops at the low of the 50 pip box. Okay, so we're inside of a peak formation. They don't have to go all the way down. Worked it in 3 pushes before reversing. Okay, 1, 2, 3, off double zeros. Engulfment for the fast stop hunt back up to 50. Little reversal trade, and then the engulfment for the fast move through the high of the session. So again, this is the pullback into traders that are already long off the bottom. So again, going long off double zeros as opposed to short off of 50. You're already in this trade. If you're not, when this market reverses and engulfs that whole structure, you're long on 1 bar for the fast move through the high of the day. So again, understanding, just going back and looking, massive consolidation. Okay, big consolidation after putting a peak formation low and creeping trend down for the fast vertical move. That's a squeeze. Every session has the same pattern. We'll just go back, clear this out, then we'll look at the pound. So again, just looking even at the US. So if we had put our stops in, we got a stop hunt to the 50, very beginning of the session. Okay, we're working the high, they've hit the stops. They continue to work the high, pulling it back inside. Middle structure at the quarter level, again, we work from 50s and double zeros. They go down in 3 pushes and work the double zeros, clearing out stops in that upper, the price action above the zero and reverse. And then the measured move for the long trade. 2 expansions of the range. It ends up being actually 3 after the New York equity market opened. So again, the equity market took it back to the extreme before reversing and pulling back and consolidating on top of 800. Heading into today's session, so same, very similar sort of situation. We see the market work down to 75, hitting stops. In the U.S. session, locking in and layering on 50. Double zeros. That was 75. Then a peak formation into this morning's session, pulling back to 25, creeping trend up, layering on 50 for the vertical move, taking out the high of the day. So again, hit the stops, high, come back. We got a low of the day as well as a low from the U.S. session at the close, hitting stops, pulling back inside. Creeping trend, breaks above 50, pulls back, comes back above. Creeping trend into 53, pushes a little micro W. Again, the shortened W structure right at the session open for a fast 25 pip stop hunt. Again, 25 to 50 pips. The market works its way up, puts a high in place, breaks it. Puts a high in place, breaks it. 1 push, 2 pushes, 3 pushes into the peak formation high. That third push occurring 38 minutes into the session. So again, 30 to 45 minutes. Okay, trend line break. We have a micro M structure and an engulfment at the high inside of the third peak, taking out the high bull candle. So again, timing is the most important thing. 3 pushes, 38 minutes into the session, working the high, working the high, working the high, working the high. Higher lows. This is all stops underneath here. Takes out that first level of stops, pulls back to 75 before dropping down below 50, taking out the low of the day. Okay, giving us our shortened W at the low of the day for a 25 pip stop hunt back up. Okay, again, working from the high and the low. Now at this stage, traders can keep trading this down, 3 pushes down. So again, they put in a high, they put in a low, pull it back into consolidation. Okay, there's the high. There's the low, pull it back into consolidation, work one side, trend the market. So they've gone vertical down to pinning to the bottom of the 00 box, pulled back and worked into 50. You can see we're still underneath 50. This market could roll back down, or in the gap time at some point maybe work back above 50 and look to clear out these stops and continue higher, or we work down and roll over and continue to make new lows. But right now we have a low of the day. They've hit stops. Okay, and we're back inside in consolidation. So I need them to either take out a peak formation high and for us to reassess then and look at where our highs and lows are, or for them to go to the low of the day and look for an entry back in the long direction or a trend trade. So hopefully you got value from that, traders. If we look at the pound and just again focusing on the one simple concept, the same concept applies each and every session, but looking at the weekly template, again understanding as the week starts, we're looking for weekly levels or daily levels to be broken, peak formations. And again, the same concept. We saw a peak formation a few Thursdays ago. The market then proceeded to work its way up towards the high. So they hit stops down low. Okay, took out daily levels down low, reversed the market, pull it back into consolidation, worked its way back up through the high and continued to work higher. So again, as the week started, possibly a reset for the long direction. So we get day one up, day two up. We get into Wednesday, the market is consolidating sideways before working down in a creeper into Friday and reversing for the 50 pip move into the close of Friday. So we have a pullback against a trending market. Market comes through on the Monday, taking out the previous Wednesday's highs, continuing to make new highs. So again, working the high, working the high, working the high. Stop hunting down low. Now working the low, flipping the zone. We have a new low of the day structure in place. So again, they've now potentially locked in the high. So we've got stop hunt high. We've got our low down where that move started. Creeping trend down, working the low, pulling back, working the low, coming down on Thursday as we saw the big 100 pip trade. So again, they worked it back inside of the box or inside of the high and the low. Okay, the market went up, locked in a high, started to make new lows. Creeper down before reversing off the the 50, giving us our W structure. And again, if we look at this now, this is a geometrical structure. If we put our measuring tool on there and look to just measure that for 2 full expansions of the range at least, we're now into a third, possibly more, so we can look at our larger structure. We'll just get rid of put this back down. Look at our bigger geometrical structure, which is the high-low of that whole structure. And we've done one full expansion almost, depending on how that market handles that 14050 level, where the second full range expansion, we could see a continuation of that for another full expansion, or the market comes back now and possibly retest the boundaries inside of this box, looking to hit traders short stops that are underneath. So again, weekly template, hit the stops trend. Could be a breakout pullback continuation or a breakout pullback reversal and trend in the opposite direction. Some cases we might have a week that's a trading range, but 15-minute charts still tell us the same story. Again, if we zoom in, look at any day of the week as the session unfolds. I talked about with the pound US pairs looking specifically at major round numbers. So again, Asia moves, okay? Moves and breaks through the previous day's high, hitting stops, expanding the range, whatnot. They continue to make new highs, so they're continuing to expand the range higher. So we're in a trending situation. Continue to work higher. They pull back now and reverse. We're inside of the consolidation. They're working the high, but they're not getting there. We have an M structure heading into the U.S. session and an engulfment for a 50 pip move down. Okay, an example of where it came off the quarters, but they locked in the high structure at 50. Continued to expand the range. They pull it back into consolidation. The stop hunt was back up into the peak formation. Okay, hit the stops, pull it back, trend the market. There's your M formation inside of a peak formation. The next day, Asia, okay, they pull it back, put a low of the day, they hit the stops, they pull it back. continue to go higher, hit the stops, come down, hit the stops on the Asian swing lows. Europe London takes it higher, hits the stops, then they trend the market. Hit the stops, trend the market. Say 25, a little bit further, they pull it back and continue the move down. 3 pushes, 1 push, 2 pushes, 3 pushes into the U.S. close, pull it back, go into consolidation. Hit the stops, work it lower, hit the stops, hit the stops, hit the stops a third time, engulfment, pin, hammer, trend the market. So consolidation, stop hunt, trend the market. Keep it simple, traders. Step back, look to the outside, pay attention to the timing window, work from the high and the low, look for the trend trade after the stop hunt, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.